So wanted to thank everybody for coming today. Again, my name is Danny Fitzgerald. I am the regional director for the San Diego Imperial Small Business Development Center Network. And we're excited to continue our Meet the Lender series. And today we have kind of a more specific topic than just kind of some of our general lending. We want to talk about it for particular uses. And one that is very common and sometimes has been rather challenging for folks, and that's being able to finance once you get a contract, say with the government or a large corporation. Basically, you get a contract, and so so let's say you meet with Cheryl, who's here on there, one of our fantastic Sbdc advisors, and you get a contract to deliver a particular service or deliver a particular product. And now you go, well, now I got to fulfill on that contract. Now you have a good problem, but it's still a problem nonetheless. And so we wanted to have today's panel to be able to talk in more detail about ways in which you're able to kind of resolve that problem from a capital standpoint, because it can be a little bit different in terms of lending for a contract that you've received and kind of what some of those options are. I think there's also, I want to make sure we kind of are able to go over some of the misconceptions that are often out there as well in terms of financing for government contracts. Sometimes there's some terms that I'm sure Fernando and Greg will talk about that sometimes have in the past have had a bad reputation, but the reality is when you use them correctly, they are actually very useful vehicles from a capital standpoint. And so wanted to also be able to kind of talk about that. But again, as a reminder, the San Diego Imperial Small Business Development Center, we're here as a resource partner of the U.S. Small Business Administration. We're also funded by the state of California through the California Office of the Small Business Advocate. And we have a team of over 120 across the San Diego and Imperial region to be able to assist businesses like you in all sorts of things. Everything from starting your business, ways in which you grow your business, from understanding the complexities of being able to get contracts with either the government or certainly a large corporation, to many other different types of strategies, and in particular being able to access capital. So we have, and that's what we're here to do, and be able to support you in that, but also to be able to provide trainings like this to better understand what's out there in the market and what's particularly there. And our Meet the Lender series is a series we have at least one webinar every month to kind of know what's happening in the capital markets. And those are sponsored by CDC Small Business Finance, Marble Bridge Funding, United Midwest Savings, Pacific Premier, LendSpark, Primary Funding, and Banner Bank. And so we're super excited. So let's get into it with our particular panel. If you have questions, feel free to drop them in the chat. I know both Lynn and Allie will be monitoring it. I'll keep an eye on it too and be able to kind of, if there's questions, weave those in with the panelists. But we'll go ahead and start with an introduction of yourselves and kind of a quick, who you are, what your organization is, and et cetera. So why don't we go ahead and start with you, Fernando?
Thank you. Good morning. Fernando Ponce with Primary Funding. So we are a community-based lender based here in San Diego. Been in San Diego about 27 years now. We really focus primarily on asset-based lending. So, big deal, key kind of things that we focus on are factoring, purchase order finance. We will do some short-term working lines of capital, and then some bridge lending as well. But really, we're just looking for those assets. So if you have receivables, if you have purchase orders, if you have anything that we can leverage basically on the business side, that's what we'll look at. Thank you.
Awesome. And DeWitt.
Hello, I'm DeWitt with Pacific Premier Bank. I'm a commercial banker, been here 6 years. Pacific Premier, we focus on business lending and real estate lending. Our business loan programs start with loans as little as $5,000 and go all the way up to $50 million plus. And the kinds of things that we finance are lines of credit for working capital, term loans for expansion, equipment loans, equipment lines, and really everything in between: partner buyouts, business acquisitions, real estate.
Awesome. What about you, Pete?
My name is Pete Deegan with LendSpark. Our office is in Carlsbad. We are a nationwide lender, and what we do is provide working capital and various equipment financing solutions, basically to anybody that can't get approved through their bank or other traditional channels, whether that be credit maybe some situations where the equipment is odd or maybe a little bit older or restricted at your bank. That's where we come in and help. And ultimately, our goal is to just kind of be a partner with your bank to help fill the gaps and keep you in good standing and a good relationship with them. Thanks for having me.
Fantastic. And Greg.
Good morning, TGIF. Greg Solomon with Oxygen Funding. And we are also an asset-based lender similar to Fernando and Primary Funding. Our focus is growth-oriented companies, and we have different product suites that allow for that growth. And our whole idea is to help these companies grow and kind of start on that when that curve is like this and seems to keep going. So we inject capital through programs like a vendor procurement program that helps with the inventory or helps with the vendors that are needed to be that aren't given terms because you're new, and so we need to pay the vendors in order to get you the product. And we tend to have different products along the lines that will help with that growth. Our whole idea is to be kind of a capital and advice lender. So, our goal is to get you at the end of this to somebody like DeWitt Dudley here that can kind of take you from, once we've helped over the first year or two, and whatever we got to do to help along the way. Big focus for us is e-commerce companies. So it's a little different, but we've certainly had a good run with that. But e-commerce companies, high growth companies, somewhere where we act as a bridge lender to get you to the next level. So excited to be here.
Fantastic. Thanks, Greg. And you definitely got your Friday shirt on. So.
All right.
So I wanted to talk a little bit. I mean, Greg, you touched on it a teeny bit, but and I think some others can kind of expand a little bit on it in terms of government contracting, and as this panel is unique to that particular thing. So again, if someone's either acquiring or getting a government contract, how does what you do fit or assist them for that? So why don't we go ahead and start with you, DeWitt?
Say that again for me, Danny. That was breaking up a little.
So if someone's getting a government contract, and since this panel is specific to that, how does what you do there at Pacific Premier be able to help them, and what would be the products that would be useful for them?
Yeah, so in my experience, the clients that I've worked with that take on government contracts usually grow slowly and steadily for a couple of years or more. And eventually there comes a time when they get a much larger contract, which they initially get really happy about. And then it's kind of like, well, how do we actually fulfill this contract? Maybe we're used to getting $100,000 contracts at a time. And then we get $1 million contract. And to satisfy that contract, we need an additional 200, 300,000 of working capital. And maybe they already have a small line, or if they don't have a line, then they have to figure out how are we going to manage our existing working capital to fulfill this larger contract, or in many cases, maybe even most cases, they need to take on some outside capital to fulfill that larger contract. So how do they do that? The cheapest source of capital is always going to be the bank, but it's also probably going to be some of the harder capital to obtain. In other words, to get capital from a bank for that larger contract, you're going to need to be able to show the bank tax returns. You're going to need to be able to show the bank historical profitability. And you're going to need to show the bank that you have a plan to not only, satisfy that larger contract, but also kind of grow into taking on larger contracts. So it really just comes down to figuring out how to manage your working capital so that you can satisfy that contract. And ultimately, the bank would like to take a look at giving you a line of credit to do that. And that would be based on historical profitability.
Fantastic. Thanks, DeWitt. And Greg, you touched on it a little bit in terms of some of what you do, but how what you do is unique to that. And you also talked a little bit about the bridge to DeWitt at a traditional bank.
Yeah, I think, for government contracts, some of those in our industry are some of our favorite to help out with because it's the government and they're going to pay. So, ultimately we like those contracts. They're tough to get. It's a bidding process, and a lot of entrepreneurs, newer companies that want to go into that space need to be educated, better by somebody like Cheryl Brown, the SBDC, or somebody to get that guidance, because it's so critical to bid it the right way. And I'll leave that alone for now, but we are a little easier to get capital to start that. That's the goal. So that's, partly why we're on the panel here, is to so many of you that are entrepreneurs help you with that capital. And the goal is that we'll help you start that contract, we'll get it moving. And then as you get more profitable, we hopefully can graduate you to a bank. But along that process, not easy. And the one thing that the government doesn't do very well is pay timely. A lot of times, sometimes the women-owned minority, you can win it, and there's some leniency, but it still could be 30, 60, 90 days for payment, in my experience anyway. And everybody's got to be prepared for payroll on that, is the kind of the number one thing as you've hired people. So Dan, I'd say, the payroll thing is the one big thing they've got to, think through when they win that job, and as being a bridge lender to go to the next place, how to account for that, through the process.
Fantastic. Thanks, Greg. And Pete, I know you guys do specific types of things, and I'm sure there's places where it fits in.
Yeah. So with a government contract, let's just say you've got a contract to build some roads or do some grading for some roads or whatnot. We can help out obviously with the equipment purchases, depending on how long your contract is for. Some of them could last a few years. It makes a lot more sense to lease or finance, maybe like a skid steer or grader or something that you might need, rather than the rental costs. Especially nowadays, they're gouging some of the customers in the rental market. So there we can help assist with your bank. Maybe you want to buy something that's like, I want to buy a used dump truck for this job. I don't need a brand new one, but the bank says, hey, we only do brand new or under, 50,000 miles. That's where we'd come into play. And then on the working capital side, again, we're working together in conjunction with your bank and some of your other lenders here on this panel, like Primary, that maybe your bank gave you $1 million and you did some factoring with some of the receivables you have or something like that. But you're still 200 grand short. Like Greg said, you have to have payroll set out for these projects. Maybe you're not paid, you're looking at your books and you're saying, hey, I need another 100 grand, 200 grand. Not a very long timetable, but just to kind of bridge the gap. That's where we come in. Maybe we can, leverage some of your receivables as far as cash flow is concerned. So it's something that's not already tied up. Say, hey, look, if I'm bringing in a couple $100 grand a month, that should be good enough from a cash flow perspective and a debt service perspective for us to give you, 50 to 100 to plug a hole here or two really quickly. Or, in some cases, we could also lend against the machinery that you have. So let's say you own a dump truck or a skid steer dozer. Hey, Pete, here's a serial number, put a lien on those real quick. We'll leverage 50,000 to help my payroll for this project to finish out. So depending on what the situation is, the specifics, we have a couple different tools, and everyone on the panel kind of works together to help you out.
Fantastic. Thanks, Pete. And Fernando, I know you guys definitely specialize in that in terms of the receivable financing. So how does it work for you all?
Yeah, very similar to what Greg does at Oxygen. I think factoring and PO financing is a very good vehicle for government contracting, especially if you're not quite able to at the point where you're able to get that line of credit with a traditional lender. We've been doing it for a while now. That there's the ability to leverage those accounts receivables, right? And so the thing with government contracts where it gets really difficult is a lot of banks don't understand how to take assignments on those contracts. And that's something that we've done a lot of work on, and we've actually learned, what that process is. So as you're bidding on these contracts, it's very important that you check off the little box that basically says, hey, I want to make this contract assignable, right? Because once you do that, you bid on that contract, and you come to anybody really on this panel, it's going to make it so much easier for them to finance that contract and actually use that as collateral. Because now all the assignability means is that you're able to assign that payment to one of us as a lender, so we can properly collateralize that. And so when we go to factor those invoices and finance against those invoices, or you have a PO and you need some money up front to go out and buy material, we're actually able to do that and take that contract as our collateral. And so that's why we're really well suited for this, because DeWitt mentioned that a lot of contractors will kind of just kind of put along steadily. Then suddenly they get the level of experience they need. They're able to start bidding on their own. They get a little bit more aggressive, go after some larger contracts, and suddenly, boom, you're doing triple your revenue that you were doing, the previous 6 years contract and help you grow with it because there's a track record that you've been doing this work. It's just that when traditional banks lend on historical data, and now you're staring down, a contract that's going to be 3 times the size of what you used to do. It's going to be really difficult to leverage that in a traditional sense. But that's where companies like ours will excel and will take that asset, which is the receivables or the PO, will leverage that to help you scale and meet those demands quickly.
So real quick, I want to do a quick follow-up question. Can you define factoring, Fernando?
Yeah, great question. So factoring, essentially the simplest way to describe it is we are purchasing invoices at a discounted rate, right? So you have an invoice for $100,000 or multiple invoices for $100,000. You're coming to us, we're going to purchase that invoice and we're going to discount it by, let's say, 2 or 4%, whatever that is. And we're going to sit on that invoice. We're going to give you the money up front so you can go and you can pay your vendors, pay your employees, cover your rents, whatever else is required in that. And that invoice pays in 30 days, we get it, we take our cut out of it, and that invoice does get paid to us directly. That's where the assignability piece comes in. And then whatever's left over, what we have in advance in our fees, then we disperse to you once that transaction is complete. So you can basically do that over and over again with as many invoices as you need to, as long as the quality of the debtor or your customer in this case is good, right? And Greg mentioned the federal government we know is always going to pay. So the quality of the debtor for the federal government or municipal governments, whatever you're dealing with, is always good. We can extend, higher and higher lines of credit based on that and factor higher and higher invoices.
Awesome. No, I appreciate that. That was a good definition because it's a term that's used a lot out there and has different things that people think what it means. And so I think that was well done. It's important. So my next question is kind of as you're going along, and I think it'll relate to some of the stuff that's going on in a little bit in the chat, and we'll get to some of those questions here in a second, but I want to ask this next one. So during the contracting cycle, so everything from the RFP to following the award, the execution, post-execution, when do you come into play, or when should someone be talking to you as a particular lender? So I'm going to go ahead and start with you, Pete, in when you think that particularly would be.
I think for us, it'd be good to have a conversation probably before, in the budgeting process, really before you started any work. We usually see people kind of crunching the numbers, like I said in the scenario before, where you have maybe a couple different loans or lenders in there, and you're looking at it and say, hey, look, I know I'm going to be short. And then I think the other time that we really come into play is maybe towards the end of the cycle, where you have, a last minute emergency or some unforeseen circumstances usually happen. And, there's a quick need or, for a last minute cash injection that we can, we don't have to leverage other traditional assets. We can slap a lien on a bulldozer, or even just leverage your cash flow and get you that little bit you need to finish.
Fantastic. Thanks, Pete. And Greg, what about you all with what you do with PO financing?
Yeah, I think for Dan, good questions. Like for everybody out there that's in here listening, when is the key time, right? How do you bring them in? Well, I think to Pete's point, you try to do it sooner than later, because I think one of the very key elements of any of the government bidding is to know what your profit margins are. It's an absolute crime to go into to win it at a really razor thin margin and not understood that, like Fernando's saying on maybe it's invoice financing and it's 2% cost, 3-4%, who knows? And you didn't budget it properly, right? You don't want to win the job just to win it, to get in it. You want to win it to make money. That's what everybody's here to do and why we're in business. So the key is to come to us early enough when you think you're going to bid. I don't think, on a would you, could you, maybe, but I think, leveraging your assets, understanding what you have, what the costs may be, so that you can put that in there as part of your bid with the right gross margins, because that is, again, just so key to get those margins, accordingly, so that with all your hard work, you're rewarded with actual money that goes in your bank to get back to DeWitt.
Well, then we'll transition to DeWitt. So the same question to you, DeWitt.
Well, I think it's a really good question, because as Greg and Fernando mentioned, when it comes to like what the net margin is, what's your profitability on the contract, it's so true that a lot of entrepreneurs, business owners that are chugging along, taking on little contracts, making good money on them. And then they get the larger one and maybe they bid much more aggressively because it's a larger contract and they're thinking, great, all I need is this big multi-million-dollar contract. And then once they get it and they realize how thin the margin might be, and then maybe, borrowing money to fulfill the contract further eats into the margin. So when it comes to figuring out how are you going to finance larger deals, it's so critical, like Greg mentioned, that you have a budget in mind, know what the profitability is going to look like, and know kind of as it relates to bidding, like how to bid on them. You're in some cases it's better just to stick with those smaller ones that you're good at doing, they're profitable, you kind of know how to bid on them, know how to win on them. But I think if a company is kind of chugging along, taking on those smaller contracts, and they have that desire to take on a bigger contract, the first call they should make is definitely to their capital source, whoever that might be. It might be a non-bank lender, it might be a bank, it might be a pool of investors that own the company, and talking with everyone and figuring out kind of the budget process. If we bid on this multi-million-dollar project, how are we going to fulfill it? We don't want to, it can ruin a company's reputation to bid on that larger contract, win that larger contract, and then for whatever reason have to back out of that. You might never win another contract from that government body or that organization or whatever it might be if you get into a position like that. So before you even bid on those bigger contracts, you should reach out to your capital source and figure out, okay, we're going to bid on this $1 million contract. If we win it, how are we going to fulfill this contract? Well, we're going to need an extra $300,000 of working capital. Okay. Can we go to our bank and get it? No. Okay. Can we go to a non-bank lender and get it? No. Okay. Well, maybe it means we have to put more equity in the company to satisfy it. And at the end of the day, if the bank isn't willing to help finance it, if a non-bank lender isn't willing to help finance it, I think that should also kind of be a sign to the company that maybe you're not quite ready to take it on. Because remember, the bank and a non-bank lender, we all want to see the company win. We all want to see the company succeed, grow, and most importantly, profit on this contract enough so that you can pay the bank back or pay the non-bank lender back. So before you even bid on those big contracts, talk to your capital source and figure out, what size you should be bidding on and how you're going to satisfy or fulfill the contract if it's awarded.
Fantastic. Thanks, DeWitt. And so, Fernando, I'm actually going to throw you a little loop on one because I think it's kind of been answered in terms of when it should come into play. I also think it ties into that because everyone's been talking about the budget, the planning, and the profits. So I want to come to Nancy's question that was in the chat, because you were talking about how necessarily the assignability works with a contract. And I know that works similarly for Greg as well. And so what, as they're talking to you, because I think that profitability comes into play, is in terms of what your particular fees would be, or what, what that would look like versus what the profitability is you're giving back to the contractor.
Yeah, it's so great question. I mean, I don't want to sound like I don't want to give a straight answer, but it's so difficult because every contract is different. It really depends on how much is being borrowed, the quality of the debtor, who they're selling to, and the duration of the contract. All of those things are really going to factor in almost equally in what the cost is going to end up being for each contract. So what I can tell you is that when it comes to factoring or PO, depending on the duration, you're going to look at paying anywhere from 2% to maybe even 6% of the value of the of the contract, just depending on how long you're out, and it could be higher than that, frankly, if you're going really long term. So it's really important to keep all those things in mind. But it's a tough question to answer directly, but just kind of look at a minimum, you're going to be paying probably at least 2% of the invoice, and maximum probably somewhere in the 10% range, let's say, something like that. I mean, it could definitely go all the way up to that.
No, and that's actually a good answer, because I think what's important to understand is what you were saying, that it does depend. It's going to depend on you, your personal credit, your history in business, et cetera, traditional underwriting style questions. But then you're factoring in also what the contract's for and who is the contract with. And I think that's important for folks to remember. As Greg was talking about, the federal government, they pay, but it's oftentimes a question of when. And, and so it's not an if, it becomes a when. However, there may be other PO situations that could be, well, there may be a question. If it's like, let's say it's a non-governmental contract or something that may be like something that may have a little bit of a risk. So I do think that was actually a good solid answer, because it does, which comes back to what you all were saying, which is talk to your lender early. With the budget, with what you're bidding on, and because that's going to factor in your profitability. So I think that kind of leads into a little bit of that question, because I think it is in terms of what that underwriting is and what that particular process is. And so I want to kind of lead into that question, which I have for you all, which is, what is kind of that underwriting or loan process? So after they start talking with you, and they're getting that, what is that particular process looks like? Why don't we start with you, Greg?
Sure. Yeah. Again, good comments from everybody here. I think hopefully they're taking some notes, and certainly ask some questions along the way in the chat box, because super critical if you've got the time you're spending here with us to make sure you get it right, and it can help you certainly win some of those jobs. And I'd say, depends on the program that we're putting into place, but as far as the underwriting requirements, and it can be, generally speaking, we're going to have an application. We're going to ask for some bank statements. And even if you're new, we want to see that you've got that set up. We're going to ask for the articles of incorporation, make sure where you're set up and that you've paid to be in business, usually with the state of California, let's say. Sometimes people, set up their entity in, say, Wyoming for tax reasons, but whatever the case is, we're going to look for that. We are going to look at your financials, but we're going to look at them a lot differently because we're kind of doing more projection based. So we want to at least see that you've got somebody on your team, or that you're outsourcing to get somebody that will be able to understand what the financials look like, especially on the job. How you're bidding the job is more important than, your past tax return. And some of you don't even have a tax return yet because you're so new, but you're using that to your advantage to win the job. So again, we're going to want to look at, the actual job itself, or what you're thinking you're going to do. Which department within the government, there's so many. And if you bid on a state of California job, it's a lot easier for a lot of us to work with that. And as kind of Fernando was talking about the assignment of that, generally you have a contracting officer or your CO, and it's a little easier. The federal jobs sometimes can be a bit more cumbersome, but again, we're going to underwrite the job. We're going to underwrite, Dan, to your point, what you said earlier, the history of who you are. We want to know who you are. I mean, you're the owner, you're the operator. Who are you? What does your credit look like? What's your resume look like? How do you have the capabilities to do this job? And that we feel comfortable lending to you with that. So again, not about all the financials, but it's about, are you set up properly? Do you have the capabilities? And, where's your gross margin in all this? Have you looked at that when you bid it? Have you accounted for things? We've certainly, all of us on this panel have seen people lose money bidding jobs, and that's can be devastating because they haven't priced them right. So just well thought out execution, sometimes even a marketing plan that you've put together through the Sbdc, to help you really prepare for that job. It's so critical because again, you win one, you can win another one, and you keep going, and pretty soon you're really flying. And all of us have been around long enough to see that happen. We want that to happen for you, but it's all in that, really thinking it through and planning.
Oh, fantastic. And Pete, what about the process there at LensPark in terms of how that works and for the working capital, the equipment, et cetera?
Yeah, so for both programs require a quick application. We do soft pulls on credit, so it doesn't impact your score whatsoever. It's free, so there's really no reason not to apply if you think you do need some funding or a piece of equipment. Many times we're able to get an answer as quickly as the same or next day on these programs. I guess the actual process itself, though, we're really more of a lender that's designed to maybe help you to grow, not so much in a startup sense. So I'd probably direct you maybe to Greg or maybe talk to Sbdc and they'll help you out as far as that's concerned. But for most of our equipment finance programs, you do require a minimum of 2 years time in business. Although when we really start to see higher approvals after the 5-year mark, usually up to 5 years time in business, we keep you in and around that 50K mark. So we don't let you buy anything too big. But with the working capital, that's going to be a little bit more, I guess, a little bit less credit and time in business base and more focused on your cash flow. So it's really just getting in and looking at the bank statements. What does your average month look like? We kind of tailor a loan that suits you and your needs and how long you need to have it for, and et cetera. But traditionally, typically, I don't think we'd ever give you more than about the average of the last 3 months of your deposit. So if you're 50K a month in deposits business, we're not going to give you more than about 50,000. So yeah, and all of these processes are quick as far as the application. Like I said, we can sometimes get an approval quickly as same day, and then the funding is usually a day or two after. So inside of a week, we're able to really help with solutions.
Awesome. And what about you, DeWitt?
Well, let's see. So with Pacific Premier Bank, we have one program that goes up to 500,000. And this could either be a line of credit or some sort of term loan. Applying for that, you would need to be in business for at least 2 years. Has a two-page application, so it's a really easy application. You fill out the application, return it with the most recent business tax return, year-to-date financials, a couple months of bank statements. And it generally takes us about a week to decision the application, and then maybe another week or week and a half to document it, sign loan docs, set it up. But I just want to note that I typically and I think Pete mentioned this also, I typically work with companies that are a little bit more established, so they didn't just get their first government contract and then are calling the bank saying, hey, we need money to figure out how to do it. I'm going to work with companies that have been in business for a bare minimum of 2 years, and really prefer to work with more established ones that have been around well over 2 years, 5 years or so. And these are the ones that have been taking on those smaller contracts, and then they get the big one and need to figure out how to satisfy it. So for a company that's been around for a few years and is doing smaller contracts and just wants a smaller line of credit to help kind of manage the working capital cycle, I could do things as small as 25,000, 50,000 for a really early stage company. But the challenge that I've seen with a lot of those earlier stage companies that are taking on government contracts is that they'll and it's kind of an ongoing theme here. They'll get awarded or win a bigger contract, when they're only 2 years in business, never gotten a line of credit from a bank, never gotten a line of credit from a non-bank lender, managing cash flow internally. And then they get a larger contract, and then they're trying to figure out, well, do we call the bank to try to get working capital for it? Do we call a non-bank lender? And if anyone ever finds themselves in that situation, I would suggest your first call is to the CDC and let them know, hey, we've been in business for a year and a half. Maybe we're just getting ready to file our first year tax return. We've got 1 year of financials. We don't have any tax returns. We've got a solid contract here that we just won. What do we do? And the CDC would probably tell you, well, your options with a bank may be limited, but this is when you call someone like Greg at Oxygen Funding, or Fernando at Primary Funding, or Pete at LendSpark. So it's really, really important just to know kind of the different stages of what kind of capital you can expect. And if you've only been around for less than 2 years, options with most banks are probably going to be fairly limited. And just to kind of circle back to what the actual application process looks like, up to 500,000, 2-page application, 1-year business tax return, year-to-date financials, couple bank statements. We will require profitability. So there's a ratio that all banks use. It's the most commonly used ratio to evaluate cash flow. It's called the debt coverage ratio. And this ratio, and I would jot this down, everyone, if you have a pen handy. This ratio, simply put, the numerator is your cash flow or your operating income. The denominator or the bottom line is going to be debt service. So in other words, if you made last year 100,000 in net income, but your debt payments are 100,000. So in other words, you made 100,000, but on all of the payments, loan payments, line of credit payments, total 100,000, your DCR or debt coverage ratio would be 1-to-1 or 1.0, because numerator is 100 grand, denominator is 100 grand, so equals 1, right? So banks are always going to look for, I shouldn't say always, they'll generally look for a 1.25 debt coverage ratio or somewhere in that ballpark, which if you think about it, if your numerator is net income, your denominator is debt payments, and it needs to be above a 1.25, that simply means that your profitability has to be 125% of what your debt payments are. So in other words, if you're making $125,000 in a year, the most debt that you could handle from a commercial bank is probably going to be $100,000 of annual payments. So when you're just looking at your financials and figuring out, should I call a bank? Should I call a non-bank lender? Look at your profitability, look at how much debt you have. And if you're, 125 or higher, then maybe you could get financing from a bank. If you're below a 125, then it might be a better fit for a non-bank lender.
No, that's
I hope I didn't
fantastic.
lose anyone there.
No, you got in the weeds, but those are important weeds. And I was glad you were explaining that, because I think that's what people, it's important to understand that from the underwriting perspective, it is a math game, and more than anything else. And that's really what's being looked at, from the lending perspective. And then when you're not fitting in particular boxes, there's alternative ways and expanded ways to do it that both Fernando, Greg, and have talked about from factoring and PO financing, and Pete from leveraging your equipment and other aspects of working capital. And I think that's really what that is. And so I'm going to move on to a little bit more fun question. I'm not going to ask the same one to you, Fernando, because I think we dug all sorts of ways into your underwriting process already. So we've already kind of talked about that. So I'm going to start. We're going to go with kind of one of our fun questions, which is our success story, which is, now we've been in the weeds. Let's talk about something, a success case that you've had recently. You can certainly anonymize it as much as you want, but just ways in which, from a lending, from a contractual situation or something like that. So we'll start with that with you, Fernando.
Yeah, happy to share. So a really cool one we did just less than a month ago. We funded a gentleman who rents basically properties on Airbnb. He's got over 100 of these properties. He's been in business about 4 years and grew his business very quickly from renting his own apartment and sleeping in his car to having over 100 locations now within 4 years. So pretty impressive story. But as you'll kind of learn as you start to look for financing, certain industries are not as favorable to banks, and when you rent properties in Airbnb, that's not really an industry that most banks are familiar with or even care to really lend money on. So I had a really hard time. Guy had good credit, profitable business, everything. It was just the industry that unfortunately he was having an issue getting funding with. So luckily we were able to put something together for him, and he's we got him a $500,000 facility that he can use to go out and basically, when he acquires new locations, he just leases these properties. He's able to actually go out and use that capital to furnish, put all of the things that you need to rent these properties out on Airbnb. And so now he has the capital to go out and gather, as pretty much, it's costing about 25 grand per location to get started. So he's got quite a bit of runway now to go out and acquire more properties. So so that was a great win. He was super happy. I mean, he'd been looking for about 18 months for working capital and had several doors closed on him. So that was a really good one that we just recently funded.
Awesome. Thank you. And Pete, you've always got a good story.
Yeah, we've always got a few interesting ones here. So I guess one that's really applicable in this setting, I would say, is a gentleman out of Florida from earlier last month who had some just tax lien issues on a prior business, but still associated with you, and he just wasn't bankable, and was just looking for someone to give him a shot. The guy just needed some skid steer, an excavator, nothing crazy, couple $50,000 invoices from a Bobcat dealership. But we worked with him. He made sure he was on a payment plan and kind of, I wouldn't say look the other way, but we're willing to work with them and establish a relationship. And he's really grateful for that. And hopefully it's going to be something that over the years, we help with multiple pieces. And then, another odd piece of equipment would be a couple months ago up in Northern California, we did a walk-in cooler, giant walk-in cooler freezer system for a meat wholesaler that was expanding very rapidly. This helped them out in various ways for, purchasing power with volume discounts, just the ability to store more on hand. But it's something that a bank kind of looks at from a collateral perspective, saying, we can't really go in there and repossess that, but is it an asset? Is it not? So they were having some tough time with getting traditional financing. We were able to get them a 3-year loan on it, which is a lot better than, unsecured options that were much shorter and higher cost. And I guess one last one that's not kind of done, but just an FYI, we do fund cannabis as well. So we are working with one of the larger, more profitable dispensaries in the area up in Orange County. They have about 10 locations, and we're hopefully looking to put something together to help them grow into locations 11 through 15 coming up in the next month or 2 here.
Fantastic. Thanks, Pete. What about you, Greg? I'm sure you've got some stories.
Yeah, we all got stories, right? That's why we're here, and it's fun. And, we get a lot of good folks from the Sbdc, and we collaborate a lot. So the whole heart of trying to do what we're doing is to work together. And a lot of us in San Diego feel like it's a small community. And so we just actually helped out with, Fernando's input, and it's a local drone company that was really been around 5 years. Initially came to an Sbdc in-person event back in the day, back in the pre-COVID days. And she was a woman-owned business that had some government jobs and taken a long time. Fernando actually helped them the first time. Then we worked together because it was kind of a complicated situation, and she was a demanding person. And we just, took her from when Fernando had initially funded her to a $1 million line. And so, again, started from Sbdc and got along the way. And, sometimes, again, we worked with LensSpark, and I've had some good stories there. So it's what we're trying to do in general, right? And another applicable one is the one we just funded here, a local kind of related to this technology company, software company that has been in business a few years, but got stuck on a government job in which the funding was for 90 days. And in fact, they had to do it. They had to deploy it and finish it and then get 90 days. So it was more like 120, 150 days, a $2 million job. And they thought they had the resources to do it. They did not. And it got referred to us through a local banker, and we funded $1.5 million. It's a line, so they've only drawn on that line about $750,000. But without us doing that, the payroll, the benefits, everything. And unfortunately, that's the one thing. Again, you got to plan with government that it could take a while. You got to meet everything exactly the way it is. But both of these people are in our community here in San Diego, and both are on their way to doing really big and better things. And DeWitt, they should be coming to you soon, right?
And as always, Greg does the transition to DeWitt.
Well, I'll give you 2 success stories, one kind of larger, later stage company and one earlier stage one. I'll start with the later stage one. This is a company that's been around for 10 years, so it's an established company. And over last summer, They won a $7 million contract from the county of San Diego. And they let me know about it. Hey, we already won the contract. So they didn't loop me in early, but it's been a client of mine for a while. So that was okay. They let me know after they won it, we're going to need to hire a couple more people. We're going to need to buy some additional equipment. We're going to need to do a software upgrade. So all of our kind of upfront costs that we know about, costs that we're going to need to incur just to get to the starting gate, we're close to $500,000. So at this company, I ended up giving them a $500,000 term loan. And they also mentioned that this contract, we're going to have to do almost 6 months of upfront work just to get to the starting gate. And then once we're at the starting gate, once we're billing and invoicing the county of San Diego, then they're going to start paying us, which will be starting January of this year. So we also need a much larger line of credit. We've got a $500,000 line, but we need $1 million line or $1 million line of credit. So I was able to increase their line from 500K to $1 million. So that was a great success for them and for the bank. An earlier stage one, this is a product company, so kind of a medical device or medical product company that incorporated in 2017. I started banking them in 2017 when they were doing like 100K, 200K of just revenue a year. Forget about profitability, but 200K of revenue a year. Before they were profitable, I gave them a small 25K line of credit. As soon as they were profitable, I was able to increase the line to a $50,000 line. And then they started realizing they have an opportunity to start selling their product to different government bodies, one of which being like the VA, since it's a medical device. Fast forward to now, and the company now has a $250,000 line with the bank. They do $2 million a year in revenue. And now the company is thinking, we've grown over the past 5 years. We're ready to buy business real estate. So one thing that I'll just leave everyone with, last comment from me. I always let my contracting clients know that a day will come when I'm not going to be able to provide any capital to. A day will come when the bank might say, you know what, we're going to scale back your line. We're going to reduce the amount of capital that we're lending to you. So for everyone on the call, just realize that two things you should keep in mind. It's a really good idea to build your personal balance sheet. And by personal balance sheet, I mean, it's a good idea to invest in things like real estate, other assets besides your business, so that when the day comes when a bank says, we're not going to fund anymore, you can tap your personal assets to fund the business. And also knowing everyone like Greg, like Fernando, like Pete is super helpful, because again, there will be a day that comes when the bank says, you know what, we can't fund anymore. And if you have that strong personal balance sheet and people in the non-bank sector, then you should easily know exactly how to continue to get extra capital if you need it.
Oh, fantastic. Thanks, Stuart. Those are great examples, and as always. And Greg, you answered a question in the chat that I thought was a good question in terms of personal credit and kind of understanding when it's important, when it's not, and what it's useful for. And I thought you had a good, succinct answer, but if you could explain that a bit.
Sure. Personal credit is asked a lot, and I think it really depends. I know Pete has, for equipment lending, different levels, and certainly personal. I'll let him speak to that on where credit can really help. For Fernando and I, it's just less or so. The personal credit is something in your past. It's not who you are at the moment. And Fernando and I are looking at who you are at the moment and what the job is that you're doing. And that's more important. Credit is part of your character, though. So I don't want to, say that it doesn't matter at all. It's showing, kind of past tendencies. So we'll probably ask about it, Dan, to your point, like what happened here. And if we can understand, hey, things do happen, but it's what I'm doing today forward, that's going to be more important to us. However, our goal is to get to the bank at some point, and do it. And every banker needs to show that credit score has improved over time to get the best possible rate. So again, it might not matter as much to right now to lend the job but it is going to be important along the way. And I think that's where the SBDC can help you clean it up a little bit. There's resources there too.
No, fantastic. And I appreciate that, Greg, because it's a good question. It's an important one to kind of understand when it comes into play, how it comes into play. And you're 100% right. We have some good webinars on understanding it and what particularly you need to do. So we're going to wrap up with kind of a last question. We combine a couple here, but it's kind of in the tips and the takeaways here. So both something that a business should never do to get funded, as well as a couple of tips to get funded. And why don't we go ahead and start off with you, Pete?
Yeah, I guess something you should never do, and this I guess happens a little bit more often than I'd like, but every once in a while we'll have somebody that just hey, you're approved for, let's say, $50,000, and they go, maybe they don't like the answer. They want or need 100. They have 100 in their head, but professionals, underwriters, we look at the bank statements, and you can't afford 100,000, right? But they don't like to hear it, so they keep going around and they keep trying to get this approval for 100 until maybe this idea comes in their head. Well, maybe I'll just get 250s, and I'm not going to tell A or B guy about it. And they try, and nowadays it's a little bit easier for us to catch this because we do communicate to each other with various channels, the lenders and banks and whatnot, and we look at your live bank before we deposit many times. But yes, there's a reason sometimes when a lender, or if you hear from maybe once, you hear something that you don't want to is fine. But if multiple lenders are declining you or approving you for lower than you're trying to get approved for, and you try to circumvent the system, you could end up putting yourself in a really precarious situation in terms of, you can't service the debt, and you may have violated some of the contracts that have what's called maybe a non-stacking addendum, or, you can't subordinate any other debt positions, and really just screw yourself up in the long run.
That's awesome. And then a couple of tips on things to do.
Easiest thing for you to do, and say this every time, is just get your online profile set up straight, because when your application address or something, maybe an old phone number, doesn't match what's on the Secretary of State site, what's on your Google page, what's on, it just opens up, you stop the whole process and have to go back and ask, what's this address? I thought this is your business address. Why does this say that here? Who is this person on the Secretary of State? Are they an owner? List them as a secretary. What's going on? So just make sure all that's cleaned up prior. It's very easy for you to do.
Fantastic. And Fernando, what are some of the things not to do, and a tip or two to do?
As far as not to do, I mean, just be upfront and honest. Don't try to omit things. It's all going to come out, and it's there's so many options out there to get deals done. If you're just upfront and honest, as Pete mentioned, we all communicate, we all talk, and at the end of the day, we're going to refer you somewhere. If it's not the right fit for me and it's a better fit for Pete or for Greg, I'm just going to say, hey, talk to Greg or talk to Pete. But if you omit things and then we go through the process and it turns out, things come out in the end and it's like, well, we really can't do the deal now because, well, one, you kept something from us and we don't really trust you anymore. Or it's just something that it would have been a better fit anyway, and you're going to have to start all over, with somebody else. So, definitely don't lie. It's going to come out. Just be upfront. If you have credit issues, be honest about them. If whatever it is, right? Just be upfront and we'll figure it out. And if it's not the right time, then we're going to tell you, hey, this is what you need to fix so that you are successful on your next attempt. As far as tips, I mean, obviously working with the Sbdc is going to be huge. I mean, they're going to help you to put your best foot forward. When you meet with any of the lenders on this panel or all the other various lenders that the Sbdc works with, they're going to put you in the best position to present in the best possible way to that lender, and not waste your time and have to go to 15 different banks or lenders to figure out which one's the right fit, right? So that's going to save you a lot of time. The other thing I would say as well is just start early on that stuff. I mean, start a relationship with a lender. Find one that's going to be a good fit for you and start a relationship. We have lots of companies that we work with that we've been working with for, call it even 6 months before they come to us with a big contract. And it's so much easier once we have some familiarity with you for us to then make that leap to, the millions of dollars, right? Whereas if if you don't have a relationship with somebody, suddenly you hit a big contract and then you come to them and you say, hey, I really need to leverage all of this money to meet these demands. It's not that we're not going to do it. If it's the right deal, it's the right deal. We're going to figure out a way to do it. But in a lot of cases, it just makes it really difficult to go from, nothing to a huge dollar amount, right? So if you start to learn, kind of those processes, get in with a lender, get some trust built, and that way, when it comes to the bigger need, you're not starting from scratch, and it's a much easier lift if there's actually a relationship in place. Even for me to call somebody else on this panel and say, hey, we've been working with these guys for, months now or a year or whatever. Great customer to work with. They know what they're doing. Those types of recommendations actually do go a long way. If somebody was to call me on this panel and tell me those things, I'm going to work extra hard to make that happen, because it's a referral that's coming from somebody that I trust, right? So build your reputation in the community as well, and it's going to make it a lot easier for you to get those approvals.
Fantastic. Thanks, Fernando. What about you, DeWitt?
Well, let's see, all the good ones have already been taken, but what can I come up with here? So two things not to do. I would, and everyone's kind of highlighted it, but I would also recommend reaching out to the Sbdc first before reaching out to a lender. So that way you can at least get, a lot of help, support in putting together your application, figuring out which is the best lender, what's the best fit for you. Things not to do also, everyone's already said be transparent, don't hide anything. That's definitely a no-no. So let me move on to things to do. So things that will hopefully help in the process: reaching out to the Sbdc first. And then second, I would say having all of your financials in order and be prepared to discuss what the plan is, what the strategy is. So if anyone gets a big contract and they reach out to a lender and they go, I've got this $1 million contract, what do I do? That conversation might not go as smoothly as the person that reaches out to the lender and goes, I've got this $1 million contract, I've crunched the numbers, I'm going to need 200,000. This contract will pay me in 10% increments over each 30, 60, 90 days. So if I can access 200K of capital, I can revolve that line and, charge it up every month or two, pay it back down every 60, 90 days or so. So have a plan in place and be ready to talk to the lender about what the plan is, what the strategy is. If you're going from smaller contracts to much larger ones, and that's what you are going to be doing like for the foreseeable future. In other words, that large contract isn't just a one-off. If it's a one-off thing, it's more like project level financing or like, just financing for one contract. But if it's part of the strategy that you're going to be growing and doing larger contracts and larger contracts and larger contracts, just have that upfront discussion with your lender and be prepared to talk about what the strategy is, where you're going to be in 1 year, 2 years, 3 years, and what you are asking of the lender to help you get there.
Fantastic. Thanks, DeWitt. We'll wrap up with you, Greg.
Sure, I'll keep it succinct. I think the key is to know what you're asking them for the funds for. So don't just say, I think I need 100,000, or to Pete's point earlier, 50 and 50. Know what the funds are for. Don't mistake that for calling us and saying, hey, I think I maybe. No, be specific about what you need it for. The more specific you are, the more that we want to help. And then a lot of good things have been said here, but I think most of you got some kind of passion for what you do, right, Amy? A lot of you have passion. So combine your passion with a plan. Have a good executed plan. You believe that, as far as where you're going with this business. So many of you are good at whatever got you there today, this morning, got you up and got you on this call, and you're moving yourself forward. Have the plan, and whether that plan comes with an advisor at Sbdc or comes from some type of a family that has some financial guidance, have that plan. The better you combine your passion with a plan, the more we want to help you as companies and as individuals.
Fantastic. And again, all great tips, things really to remember. And again, like everyone's saying, I mean, we're here at the SBDC. We're not a lender. We don't have, our vested interest is basically you succeed. We're no cost. We have expert advisors, we're finance advisors, folks to help you be able to get the government contracts. And so really appreciate our panelists, DeWitt, Fernando, Greg, and Pete, and also all of our sponsors for our Meet the Lender series, CDC Small Business Finance, Marble Bridge Funding, United Midwest Savings, Pacific Premier, Lenspark, Primary Funding, and Banner Bank. And thank you all for being on today for kind of our special panel on government contract financing. We know it's something that's important and certainly valuable for all. So have a great Friday. Have a great
Thanks,
weekend.
Dan, for leading us. Appreciate it. Thank you, Lynn.
Take care, everyone. Have a good weekend.
Bye-bye.